They're playing a psychological game, a high-stakes chess match for your financial future. Are you going to let them succeed? My name is Casper, and I dissect the hidden currents of the crypto market. Today, I'm pulling back the curtain on what's really happening behind these market dips. This isn't just volatility. This is a calculated strategy. In the next 14 minutes, you'll learn exactly who is behind these market shakeouts, why they're doing it, and most importantly, how you can protect yourself and even profit from their deception. We're diving deep into XRP, HBAR, XLM, and SUI, revealing why these assets are under attack and why they represent an unprecedented opportunity if you hold strong. You see the headlines: tariff talks spark global uncertainty. Interest rates remain high. These do impact the market. But what if these waves of fear are being strategically amplified? What if the very institutions buying your assets are the ones whispering fear into the mainstream media, creating the perfect storm for panic selling? That's what's happening. The numbers expose their game. But how do they pull this off? And what specific event just triggered this latest wave of fear? You're about to find out. Let's break down the mechanics. Liquidation cascades. Imagine crypto as a giant web of leveraged bets. When prices drop sharply, these positions automatically close. It's a domino effect. Forced selling pushes prices down, triggering more liquidations. Just yesterday, August 1, 2025, over $700 million in crypto long positions were wiped out in 24 hours. This wasn't natural. It was a cleansing. Who benefits? The big exchanges, the institutional whales. They love this. They know that when the market is gripped by fear, retail investors dump their bags, and it's prime time for them to accumulate at rock-bottom prices. It's the ultimate buy low strategy, executed by triggering your sell high. But there's a deeper layer to this, a deliberate manipulation of headlines. This week, mainstream news screamed about President Trump's new tariffs and global trade war fears, impacting traditional stocks. But here's the crucial question: is this a genuine economic meltdown, or a convenient excuse to justify this crypto shakeout? While headlines scream fear, something else is quietly happening that tells a completely different story about the actual health of the global economy and its relationship with digital assets. What are these hidden developments that contradict the fear narrative? While headlines scream trade war, the reality is major trade deals are happening. China is working with the US. The EU has a new deal with Mexico. The UK is pursuing deals. President Trump's America First agenda is progressing in rebalancing global trade, including advancements with Japan, South Korea, and even China, despite the tariff theatrics. The IMF, in its July 2025 update, projects upward revisions for global growth in 2025 and 2026, at 3% and 3.1% respectively. This isn't an economy collapsing, it's adjusting, consolidating, and maturing. So trade war is often a politically charged narrative leveraged to spook markets, creating a perfect backdrop for shakeouts. But if the macro picture is more stable, why are your crypto assets, specifically, being targeted? Now, let's zoom in on crypto. There's a specific reason why assets like XRP, HBAR, XLM, and SUI are often at the epicenter of these shakeouts. It's not just profit, it's positioning. These aren't average meme coins. They're foundational technologies disrupting trillion-dollar industries. When you see their prices correcting, it's often not failure, but a final attempt to flush out the weak hands before a truly seismic shift. But what specifically is about to happen that makes these assets so valuable to those trying to buy them from you for cheap? The biggest catalyst, the hidden truth beneath the fear, is the accelerating pace of regulatory clarity and institutional adoption. This is no longer a pipe dream. In the USA, we're seeing a golden era of cryptocurrency. Just last month, on July 18, 2025, President Trump signed the Genius Act into law. This landmark legislation establishes a clear federal framework for payment stablecoins, designating them as not securities or commodities. This paves the way for massive institutional inflows and even potential 401k crypto allocations, your retirement funds, finally having access. Polymarket shows an 85% chance of a spot XRP ETF approval in 2025. Think about the Bitcoin ETF approval. Now imagine that for XRP. The smart money knows this is coming, and they want your cheap coins before the floodgates open. The same goes for HBAR and XLM, the regulatory pathway is clearing for these assets to be packaged for institutional investors. So if the long-term outlook is so bullish, why are prices dipping now? This is the retail disconnect. While you're seeing fear on social media, institutions are seeing discount opportunities. They are targeting specific price levels, demand zones or support zones, where they step in, buying up massive amounts of crypto that you're selling out of fear. But how can you identify these buy zones and flip the script? What are the exact levels for XRP, HBAR, XLM, and SUI where the smart money is likely accumulating? Let's get specific. For XRP, strong demand is building between $2.60 and $2.80. These are critical retest zones, perfect for institutional accumulation. Expect quick wicks down before a sharp rebound. Remember, XRP was trading around $3.40 in July, so this dip is significant. For XLM, the demand zone is around 32 cents to 38 cents, aligning with retesting key averages. These are the sale racks for assets institutions know will be retail luxury goods soon. SUI appears to be nearing its bottoming point around $3.11 to $3.60. The chart shows consolidation, and smart money is building positions. Its growth in TVL to over $2 billion earlier this year makes these levels even more attractive. And then there's HBAR. We're watching the 19 cents to 23 cents range very closely. This is where enterprise adoption news is likely to cause massive buy-side pressure. The key takeaway: these dips are not accidents, they're orchestrated opportunities. What happens after they finish accumulating? The smart money isn't buying to sit on their hands. They're buying because they know what comes next, an explosive reversal. This is a pattern we've seen countless times. Every major fearful event, FTX, Luna, bank collapses, was a massive buy opportunity. We're in August now. This month can be a shakeout month. But what if this August is the last major shakeout before the next leg up? What is the undeniable signal, the all-clear moment, that will tell us this fear is over, and the market is about to rip higher? And how will this unleash XRP, HBAR, XLM, and SUI? Look at the Fear and Greed Index. It's currently at 50 neutral. This is healthy. The smart money loves this. They want fear, but not panic. They want you to sell, not completely capitulate. The all-clear signal? Bitcoin's behavior. We've been predicting a retest of the $112,000 range, possibly even down to $107,000. This is a critical liquidity grab, a final test of conviction. If Bitcoin holds these levels and starts to reclaim resistance, that's your sign. From there, a push to $120,000 and then a breakout to $130,000 is highly probable. When Bitcoin surges, it pulls the entire market with it. This is where your XRP, your HBAR, your XLM, and your SUI truly begin to shine. These assets are fundamentally positioned to absorb massive institutional capital once Bitcoin has led the charge. The fear narrative is a temporary cover for strategic accumulation. While XRP and XLM make strides in payments, and SUI carves its niche, HBAR operates on an entirely different level. It's not just participating, it's building the rails for the new digital economy. Think of it as the internet's operating system for businesses. But why is HBAR so uniquely positioned to withstand shakeouts and thrive? What multi-billion-dollar companies and even governments are quietly building on Hedera, making it a critical, non-negotiable part of the future financial infrastructure, completely under the radar for most retail investors? The answer will shock you. This is the climax of our story, and it centers on HBAR. While retail is shaken out, enterprises are doubling down on Hedera. Companies like Google, IBM, LG, Boeing, Wipro, and just recently on June 24, 2025, Blockchain for Energy, B4E, joined the Hedera Governing Council, global giants building real-world applications. Just last month, on July 10, 2025, EQTY Lab, NVIDIA, and Intel unveiled verifiable compute. Imagine every AI computation on compatible Intel CPUs and NVIDIA GPUs being immutably recorded on Hedera. This is Hedera becoming the foundational layer for sovereign AI systems, enabling cryptographic proof of governance and policy compliance. This is a multi-trillion-dollar market opportunity HBAR is directly enabling. Beyond AI, HBAR is integral to real-world asset, RWA tokenization, projected to reach $18 trillion by 2030. Central banks are exploring DLT for CBDCs, and Hedera's enterprise-grade security, speed, and governance make it a prime candidate. The manipulators want you to believe nothing is happening with HBAR. They want you to sell your HBAR now, before the world wakes up to its true utility. Because once these enterprise applications go live at scale, the price action won't be about speculation. It will be about fundamental utility and demand on a scale we've never seen before. So, you understand the game. You know about the shakeouts. You see the institutional plays. But here's the hardest part, the final battle. It's fought in your own mind. When the FUD, the fear, uncertainty, and doubt, hits hardest, that's precisely when you need to be most disciplined. The psychological warfare is designed to wear you down, to make you doubt your research. But what is the single most powerful tool you possess to resist this manipulation? And how can you apply it to ensure you don't become another casualty, especially as we head into what could be the most explosive period for XRP, HBAR, XLM, and SUI? Your most powerful tool? A long-term perspective fueled by deep conviction. When everyone is panicking, that is your signal to buy. This is the mantra of the smart money. Imagine a stormy sea. Most people on small boats are tossed about, panicking. The institutions are on giant, unshakable tankers, calmly navigating the waves, knowing the sun will return. Your job is to get on that tanker. Practical steps. 1. DCA, dollar cost average. Don't try to time the absolute bottom. Invest a fixed amount consistently. 2. Research and conviction. Don't rely on headlines. Do your own deep research. Understand the utility of assets like XRP for payments, HBAR for enterprise DLT, XLM for remittances, and SUI for Web3. 3. Set price targets, not emotion targets. Have a clear exit strategy for parts of your portfolio. The market is designed to transfer wealth from the impatient to the patient. You have the power to be patient. Let's look at the rocket fuel. XRP, RippleNet's on-demand liquidity (ODL), continues to expand globally. More financial institutions are adopting XRP for real-time, low-cost cross-border payments. The Genius Act's clarity for stablecoins will inevitably benefit XRP by establishing a robust regulatory landscape. XLM, Stellar Soroban's smart contract platform, is drawing developers. The Stellar Development Foundation is targeting 5,000 transactions per second, TPS, for Stellar Core in 2025 as Soroban adoption accelerates. Plus, XLM's partnerships with giants like Visa, MoneyGram, and PayPal continue to solidify its real-world use cases. SUI. This player is quickly becoming a powerhouse in Web3 gaming and DeFi. Earlier this year, SUI's TVL briefly surpassed $2 billion, and its perpetual DX recorded over $5.5 billion in trading volume in January 2025. Its unique architecture allows for incredibly fast transactions, attracting dApps and users, especially with the upcoming SuiPlay 0x1 gaming device launch expected to be a major catalyst. HBAR. And then there's HBAR. It's built for transactions at internet scale. Its consensus mechanism allows for hundreds of thousands of transactions per second. Every enterprise building on Hedera, every transaction, every new partnership, like with blockchain for energy, adds immutable value that will eventually be reflected in the HBAR price. Keep an eye on new governing council announcements and the continued rollout of verifiable compute with NVIDIA and Intel. The fear, the uncertainty, the manipulation. It's all designed to get you to surrender your assets right before they explode. You have seen the evidence. You know the tactics. You understand the fundamental strength of XRP, HBAR, XLM, and SUI. This isn't just a market correction, it's a mass wealth transfer from the impatient to the informed. The next few months are critical. Do you fall victim to the FUD, or do you stand firm, armed with knowledge, and seize this unprecedented opportunity? The choice is yours. You now have the power to see through the noise. You are no longer a passive observer, you are an informed participant in the greatest financial shift of our lifetime. Embrace the dips, understand the game, and stay vigilant. If this video empowered you, hit that like button, subscribe, and turn on notifications so you never miss another critical update. And for more deep dives into how specific regulations will unleash XRP's global potential, click on the video on your screen right now. Your future self will thank you.